And for more on Chinese e-giant Alibaba's planned IPO, we're joined by Francis Gaskins, Director of Research at Equities.com. Thanks for joining us tonight, sir.
Yes, thank you.
So Alibaba held its kickoff meeting for its planned US IPO today. That was held in Hong Kong, but is it a certainty that the IPO will be held in the US at this stage?
Well, I'm highly confident that it will be in the U.S. because they were thinking about listing on the Hong Kong exchange, but there were some structural ownership problems that the major shareholder wasn't willing to change in the Hong Kong exchange. And in the U.S. exchange, it doesn't make any difference. So he can go ahead and list here, and he doesn't have to change any ownership.
So, Francis, if it does list in the U.S., is the New York Stock Exchange the front runner, or does the NASDAQ have a chance, given this is a tech e-commerce company?
I believe it'll probably be the New York Stock Exchange because a Chinese company would probably want to go with the oldest and the biggest.
All right. Well, speaking of big, Wall Street investment banks are salivating at the size of this deal. It's supposed to be huge. What's your forecast on the evaluation?
Well, I haven't seen the numbers, of course, but I've heard that the IPO would be between 15 and 20 billion. Facebook's IPO was 16 billion, and the market cap might be between 150 and 200 billion. So that would, in that range, they would sell only 10% of the company, which is not a large percent. It's a big dollar amount. Certainly, it's one of the biggest. But I think what they would want to do is come public, and they'd want to see the stock creep up a little bit, because what these companies are doing is they're doing their IPOs and they're following up with secondaries as soon as they can, within months.
Well, some of the players involved are Citigroup, Credit Suisse, Deutsche Bank, Goldman Sachs, JP Morgan, and Morgan Stanley. They're all vying for the lead underwriting roles. Who, in your opinion, is most likely to take the biggest role here?
Well, in the U.S., it fluctuates between Morgan and Goldman. And so if I had to bet, I'd bet it'd probably be between those two. In the case of Facebook, they had the lead underwriters, but then they also had 33 investment banks that were part of the underwriting, and then they had a selling group on top of that. So Alibaba is so big, it probably, most of the bankers, the investment bankers in the U.S. will be involved in one way or another.
So they can all expect to cash in quite well on this. What kind of fees do these banks expect to get?
Well, probably about 300 million. Which sounds like a large amount of money, but they've been negotiated down. I mean, for a $15 to $20 billion IPO, you would think the fees would be a little bit higher, but the negotiators on the company side they're tough.
Now, Francis, you mentioned Facebook, and this IPO is being described as the most high-profile listing since Facebook was offering nearly 2 years ago. Why is this such a huge deal?
Well, if you think of Amazon, which of course is a big company, and think of eBay, which is pretty big, and think of PayPal, and Alibaba has elements of all of those. So think of the combination of Amazon, eBay, and PayPal going public with a few other additional features and programs. And so I mean that's an enormous amount of consumer commerce. And I think what the institutions want, they would like to play the China e-commerce segment, and Alibaba would just be a perfect pure way to do that.
Well, you say the names like Amazon and eBay. Those are names that American investors know very well. Are U.S. investors familiar enough with Alibaba to react to this offering in such a big way? Or is it being seen and sold to investors as a way to gain access to China's economy?
Well, I think the larger investors in the U.S. are aware of Alibaba. I mean, it's had the Yahoo relationship. We've known about that for a long time. And the concept is pretty simple. What the institutional investors look for is they look for clear market leaders that dominate their markets, that are doing well financially, have top-line revenue growth, and are profitable, and have high barriers to competitive entry. I know that Alibaba has a couple of competitors that are competing with them in high-growth markets. But when it's all said and done, Alibaba has a reputation of being the leader in this market.
Okay, and you mentioned Yahoo. Yahoo, of course, owns 24% of Alibaba gains to profit there. We're going to have to leave it there. Thank you so much.